Good evening, all of you. I hope my voice is loud and clear. If my voice is loud and clear, please reply me in the chat box. Okay. All right. Thank you so much. Today is very important day. See, in the markets, there are three things which we require. The first thing is your trading tools. The tools always help us to identify the right opportunity, right time, you know, and right opportunity for selling at the right time. The money management level, which we have discussed yesterday, it's very important to stay in the market forever. But the third things, which is very, very important, which I can wait, the more than 60%, and which is the trading psychology. If you have a good trading psychology, if you have a control on your emotions, if you have a control on your mind, then the success is yours. So the mind, the mastermind, the follow money and the control risk is the, trading strategies. There are three pillars in the tradings, as I mentioned: the trading psychology, smart money, and the money management and the trading tools. So the reality of the markets, my friend, the reality is market which we don't understand. You know, all the market is driven by a big people, a people who sitting, saying smart money concept or smart money, like institutions, like crowd behaviors, like DIIs, like FIIs. So these are the people actually drive the markets. You and me is just a follower. We cannot drive the market because we don't have that much money. So even those institutions, they are not a single institutions, they are multiple institutions coming together and take stocks ups. Now let me tell you the psychology. The psychology versus the smart money, or the psychology versus the people who drive the markets. Now these are the retail traders. Retail traders always stay in a fear mode. So why they stay in a fear mode? The number one is they have limited money, right? They have a limited money. Number one. Number two is they don't know exactly will the market will go up or down. It's an uncertainty. It's an uncertainty. So when there is an uncertainty, then they have to stay in a hope, right? They have to stay in a hope because they don't know what is going to be happens. There are a number of times, they make a mistakes because of the greeds. So the fear and the greeds is the main disaster of the trader's trading life. And the retail traders education is very less compared to the smart money. The retail traders, the mentality or the thinking capacity is very different than the smart money. So what exactly smart money does? The smart money is like they accumulate. They accumulate. It means they buy from the retail traders. they buy from the retail traders. They keep buying, keep buying, keep buying because they have a lot of money to pump in. We don't have that much money. We are waiting. Once we traded, we have a one lot or two lots. We are waiting to get the result. But actually, and we don't have a time. We are waiting. See, we are waiting, but we don't have a time. So our max to max time will be 1 hour, 2 hour, 5 hours, or one day, and not beyond that. But in this case, if you talk about the smart money concepts, they have a lot of times. It means they can wait. Generally they wait 7 days, 15 days somewhere. Okay. But we want every day to trade, every day to trade, every day to make money. And because of that, see, in the 1 hour or 2 hours or the one day, it's not possible that market will give you the rewards all the times. Sometimes by luckily it's okay, but all the times you are not going to get the rewards. And this is the reality which we as a retail traders don't understand. The smart money is actually smart. So they start accumulations, they do the buying, and after buying, they hold the position. Understand? After the buying, they hold the positions and they don't sell. They don't sell when the market is down, or actually they knows where the market is going to go, but they have a capacity to hold the position, and they have a mentality also. They also have a mindset of that the markets will go up, but we need to wait. And then strategically they start distributions. So what is the distributions? So the distribution is something like a slowly they sell it out. Now understand, a smart money buy in a bulk. We buy only one lot, all right? The smart money, or we buy only one time. But the smart money, they buy hundreds and thousands of lots one time, and they buy multiple times. We don't have that much money, So the difference is between the retail traders and the smart money is they act according to the smartness. We act like a fool. We are not able to understand the market behavior. We are retail traders want money within a short period of times, which is not, in the reality, it's not possible. Okay, so better to trade like a smart money. So what is the accumulation phase? So as I say, the accumulation phase is when the market is trading in the sideways zone, it means it's an accumulation phase. Okay, so when the accumulation phase is going on, either you can hold, it means don't buy, right? Or trade slowly or small pips. I suggest this phase is a base for the accumulation for those people who have a good capital. So where you will buy? So you will buy only and only when the breakout is happen. Understands? When you see the accumulation phase is going on, wait for some time. They wait with the position. Understand? The smart money waits with the positions. You are not having capacity to hold those kind of position. So you will not wait with the position, but you will wait with the money. Okay. There is something called one ADX line. These are the ADX line. So you can easily identify the accumulation phase and the distribution phase by plotting this, the ADX line. Okay. Now, what is the distribution? So the distribution phase is something like, they are selling us slowly, slowly, slowly. So when you book the profit, once you book the profit and the market is going on the sideways zone, you should not enter in that kind of phase until and unless either it is not breaking down. Okay. So once the breakdown happens, then you can trade. So this is the smart trades. This is the way actually the smart people do tradings, and you as a retailer identify their moves, how they are, the tradings, understand their psychology, and then you go ahead. Okay, so today in the psychology, we are going to learn about the psychology. So retail traders always, the trap out, you know retail trader always trap out, they buy late and the sale after the fall. This is the psychology. This is caused because of the emotions. Okay, it's the emotions. How many people are experience this, that number of times they buy late and they sell after fall? I'll give you one example. Last month, you see the stocks trading was $50, and this month, starting off this month, you see in the stocks traded around $100. You seen, but you not reacted. After 7 days, the same stocks is gone up to 120. Once you see the 120, you realize that it was 50 last month. This month also, when I seen it was 100, and suddenly it's gone up 120. It's good stocks. But still, you not think about the buy and all, nothing. After the 10-15 days, the same stocks was up to 130. When you see the 130, you feel it's a good stocks. I should buy, what if I would have bought 100 level, 120 levels, I would have gained a good amount of money. So by thinking, the stocks goes to 140. Again, when you see the stock is trading 140, you realize that you made a mistake. You should buy at it was 100. Forget about 100. I should buy at least, I would have bought 120. At least the 20%, I would have made a good amount of money. What to do now? So after the few days, you see the advertise, you see the message on medias that these stocks will go up to 300 levels. Okay, this analyst says, the stock is good, company is good. So in that case, you are thinking something, yeah, I missed the opportunity. It was 50, now it is 150. It's okay. But from here, from here, it's going 300. So there are a chance to make money double from here. Let's buy it. So what do we do is, we buy at 150 level, assuming that this will go up. After buying, say after 15, 20 days, you see the stocks goes up to 160, 65. You become very happy, assuming that you have taken a right decision. Sudden some news comes or market crash, right? So that 165 started going down up to 140. When you see the 140, you realize it's a markets. Okay. So of course, from the 50 levels, it's gone 165. So some profit booking will come. Okay, it's okay. 140, it's okay. Few days later, when you see the same stocks from the 140, it's gone down 130. Then you think, I'm losing $20. But the second mind says, it's okay. Okay. So I just wanted to ask, have you faced this kind of experience? Do you have this kind of experience? Reply me in the chat box. How many people experience this? Can you reply me in the chat box? How many people experience this kind of strategies or the tragedy? Reply me in the chat box. Okay. Now, when you see the market price is around 120, a number of times what people do is they buy again. If they have money, they buy again. And when we see the from the 120, it's gone 115. That time actually we break. What we do is we break. We think I have made big mistakes, right? I need to go out from this positions. Otherwise, it will become, again, it will go up to 50 levels. Right or wrong? Again, it will go up to 50 levels. And then we sell it out. See, from the 50, it's gone up 165. And from 165, it's gone 115. And when you sell the stocks, after the selling, in next 10 to 15 days, you see the stock market is going up. From 115, it's gone 130. Right? And the slowly, markets start going up. Is this happens with you? Reply me in the chat box. This is the market actually. This is the market. And because of the movement, because of the greed, because of the not having a proper knowledge, we lose money. So there are many emotions. There are many emotions involved in the markets. You need to understand. You need to identify those kind of emotions. Trade not because of the market is going up. Understand, the trades don't trade because of the market is going up. Trade because of there is some logic behind the trades. Now the market is going up. See, other people are making money. You are not making money. You are just looking on the chart. You are looking on the price. You are not making money. And once the market shown you the some greediness, and because of somebody else, somebody said, on the social medias or anywhere, they have told you to it will go up, and that's the reason you are buying. You are not buying based on your strategy. You are not buying based on any strategies or anywhere where you have a confidence. You are buying because of somebody influence you, right? So these are the reason, people, these so one of reason. Okay, there are number of problems, but this is the one of the reasons where people actually fail. Okay, let's go and see what's in the distributions modes. In the distributions modes, always, the big people never sell their stocks one time at a one time. They always will, the make you the frustrate, by selling their stocks slowly. In this phase, you will find a lot of news about the stocks. A number of people will say, this is the good buying, good levels. You will see the forecast also, the good forecast. Understand? These are the trapping zones. These are the trapping zones. And we not understand these kind of trapping zones. In the distribution, when you see number of times the market is trading in the same zone, up down, same zone. Understand, the big people are trying to sell their stocks, and a number of times the failing chances is more. So when the distribution phase is there, you should avoid either the trades or keep with money, keep with the funds. We we always maintain this kind of disciplines. If there is a signal, if there is a probability to go up, then only we buy. Otherwise, we don't buy. We keep staying. I think this week we have not done a lot. The compared to the last week, we have not done the trades. Why? There was no, it's a kind of dead markets. You see the chart of the gold, you will see it's a dead market. It's not going up, it's not going down. Okay, the trading is happening in the same range. So sometimes we get the signals, but maybe that signals also failed because it's trading in the the same zone. Now, this signal is failing. It's a market, so we also can't predict that this will not trap. So understand, you as a trader, you should think about the strategy. You should think about the right opportunity, and not each and every times you will enter the positions. You know. So the psychology fails is like, as I mentioned, people always buy a late. Okay. So the earlier example, you just remember the earlier examples. The person who's see the 50, okay, he not did not bought at 100, it's not bought 120, 130, 140, he bought 150. And when he bought 150, there was some reasons. What was the reason? The reason was the price gone up like anything, and because of someone has told, there was some news. So because of that influence, the person has purchased. Okay. So always remember, these are the people who are the legendary people. Okay. These are the people always sticks with their money management tools. Okay, money management tools, a psychology trap. So the retail trader always, they chase the momentum. So they buy, they sell, they buy, they sell, they buy, they sell. Ultimately, they wipe out the capital when there's some problem, or some the big volatility comes in this one volatility, one mistakes ruin out all the entire capitals. One single mistakes. Okay. See, news can come anytime. Understand? News can come anytime and anything. So maybe that the positive news or the negative news. You should be with your proper stop loss. You should be ready always. Because the stock market is something like a war. It's a war, and you don't know when the other person will attack you. You know, when the other person will attack you. If you have bought something, somebody will attack you, they will do the short selling and you will lose money. So if you are with the setup, if you are ready with the weapons with you, you will always be ready, to hit, and or you will always to be there at least for the save yourself. So understand, retail traders are the people, who is earning, from here and from there, here and there. Okay. And all the people are putting their money to the donation. Okay. Now, we as a retail traders will not give you the donations in the hospital. We will not help the people who is really needs. Okay. But we will definitely go to the markets and we will donate. Okay. Number of people will not learn. Understand. Number of people will avoid a learning fees. Number of people will avoid learning. They will not join the courses. They will not join the academies for the learning things. But they will trade in the markets without knowledge. So this is the actually fact. People, institutional, knows each and everything about the retail traders. Not because the psychology. Okay. Apart from the psychology, they have many techniques, they have many infrastructure to read your mind. Understand? So how they read your minds? So based on your orders, when you put your orders, they know how many people are there inside. Okay. So these are the people, they are taking your stop loss, and the markets goes up. So these are the people who wanted to take your money. People are losing, not because they don't know anything about the market, but people are losing because of they don't able to handle their emotions. In spite of having the knowledge, they will do the mistakes. Am I right or wrong? Reply me in the chat box, please. Whatever I'm talking about, am I right or wrong? Whatever I'm talking about, am I right or wrong? Reply me in the chat box. If you think I'm right, please reply in the chat box. Do you think I'm right? Okay. Thank you so much. So the thing is, my friends, everybody wants to make money, right? In this, everybody wants to make money. With this, their want is with the emotions. The retail traders wants money with the emotions. The professional traders wants money with the strategy. I hope you understood the meaning of this. The retail traders wants money, but they wants money with the emotion. They say with the emotions, I want money. The professional one, they wants money, but they wants money based on their strategy and the logic. So this is the difference between the retail traders and the institutions one. Okay. Psychology plays the role more than 60% in the markets because of the mass psychology, because of the mass psychology, people are not able to understand other people's mind. Okay. People is not able to understand others' minds, and there is a conflict. Some people are buying, some people are selling, buying, selling, but wherever a demand is there, we are not able to understand which side the demand is. And we are just playing because the price is fluctuate, means price is going up, price is going down. You see the up, down, up, down, up, down. And because of that, assuming you are, you are assuming that it will go up, that's the reason you are buying. But there is no any logic behind the buy. There is no logic behind the sale. You are buying and you are selling because of the price influence your mind. Yes or no? Yes or no? See, the risk come when you don't have the confidence. Understand? Risk come when you don't have your exit points. And when you have, when you don't have an exit point, then definitely you don't have a confidence. And when you don't have a confidence, your psychology will not work at that time. Okay. So as we have gone through the money management rules, when you have a good money management, when we have a good entry levels, okay, it will help to build your psychology, right? There are three things only in the markets. If you keep three things with the strict, the rules, you will make a good amount. You will make a good amount of money, and you will be the profitable traders. First thing is trading tools. Second thing is the money management, and third thing is psychology. Now the tools you can get from anywhere. It's a free stuff. The money management also you can learn from the understanding the videos or the books. But trading psychology, you have to be there in the markets live, and you have to experience the happening. You have to be experienced what it is going on. And that's the reason actually we at DIGLOK Trainer teach people very with the knowledgeable mentors and live. Okay, practical. You can say it's a practical. We teach them practical because experience is required. You should gone through this the phase. So mentor will actually help you to understand this phase. But if you are doing alone, then it's not possible. And that's why actually I always say why retail people makes the losses consistently, because they don't have anybody to ask whether I'm doing right or wrong. If you are my student, if you are making losses, you can come to us. You can come to us. You can ask, I'm making losses. Do you have any strategy? How I can build the strategy like a pro? What I'm doing wrong? what I'm doing right? You can ask, and we will analyze your traits, and we will give you the right opportunity or a right, the advice. You change your trading psychology, you change your trading tools, you change your money management level. Something there should be, in your trading systems, which is not, making a profitable trader for you. We helps. So that's the reason actually I'm not telling about me itself. I'm telling about you should have at least one mentor in your life for trading. Without mentor, the life is like a struggling. I'm telling you. Without mentor, the life is a struggling. You will do the R&D, research and developments. Okay, in that you will lose your money, that you will lose your time as well. Okay, and each and everything, what means how the retail trader behaves. All those, the big fish or the big people or the institutional or the SMC, everything they knows how the psychology is, how the retail psychology is. So that's why actually, my friend, you need to learn. Trading psychology will develop only and only when you experience the live things. When you experience you should have somebody to teach you, to taught you, don't do this, do this. Understand? This is the way to trade in the markets. Without learning, you are not able to, the trades. Okay. The risk capacity, every person have a different risk capacity. The legendary people who always believe in a 2% rules. They always believe in the 2% rules. The 2% rule is something like, suppose you have a capital of, the 1 million. So you will never lose more than, or whatever capital you have. Okay. So they never lose. Okay. They will not trade, and they will not lose more than 2% on their entire capital. So you should have, so what we have discussed yesterday in a drawdown mode. Okay, this thought it was not something like a percentage, but I say it's a drawdown mode. Okay, so these are the drawdown initially. The people actually are there the rules. So maybe this 1% or 2% rules will not apply for those people who have less equities like 100 to 100 $500. Actually, it will not apply for them. Okay. So, but understand one thing which is very important to understand is, in spite of having, suppose you have a $100 equity. Okay, assume you have a $100 equity and you are buying 0.01 lot of the gold. You are taking a risk of the $4,400. So assume the price is 4,400. So your risk is $4,400. So ultimately, the 4,000 is your capital. 4,000 is your virtual capitals. You can put the 2% on that 4%, 4,000. So if you put that 4%, it means $80. So $80 is, it will be your risk, or $8 somewhere. Okay. So that you can calculate 2% rules. Okay. Even if you have a less in the capitals, but you are playing in a big role, right? You have a less capital, $100 capital, but you are buying, suppose if you are buying 10 lots, then you are taking the equity of, or your contract value will be $40,000. If you take a 0.10 lots, your contract will be the $40,000. So you can consider that 40,000 into 2%. 40,000 into 2%. That would be your max to max risk. Okay, or 40,000 will be the 4%. So that would be your max to max risk of the $400. Okay, so this is the way actually the big legendary people have told that you should not go more than 2% risk based on your capitals. How many people enjoying this session? Reply me in the chat box. How many people are really enjoying these sessions? And those people who are watching from the YouTube, please subscribe, please like, and please subscribe. Those people who is watching, please like and subscribe. Those people who are watching, please like and subscribe the channel. Anyways, how many people are enjoying this session? Do you think today's session is related to you? Yes or no? Do you think this today's session is relevance? Yes. See the psychology discipline. The psychology discipline, it's something like, follow the plan. Okay? Follow the plan. Accept the loss. Number of people don't like to accept the loss. Understand? In the market, the losses are inevitable. You cannot avoid, you cannot bypass the loss. Small loss you have to take, and the big profit you have to take. That should be the goal. Avoid the revenge kind of trades. Revenge trading is always danger. See, you cannot win in the markets if you think that you will fight with the markets. So Mr. Markets is not going to leave you alone. The Mr. Market is going to take your all money. So don't try to do the trade with the revenge one. Okay, so there are a few emotions, something like a hope. When we are in a loss and the losses goes above the control, so we start praying, God, do something. But I just wanted to tell you, it's unfortunate, no God listen in the markets. Okay, no God will listen your story in the markets. So don't try to faith on a God when you are trading in the markets, because the trading is a skill you need to develop. God has given you the skill. God says you educate, you take a knowledge, educate yourself, invest your time before invest your money, and then you trade. But what we do, we don't invest our time to analyze. We direct invest money and then we go to the God. So don't do that, because in this emotion cycle, the hope will not work. If you talk about the greed, always, people lose. People lose not money, entire life. People fail miserably. People make mistakes. People ruin their capitals because of the greed, nothing else. Because of the greed. Understand, greed is not a good. Greed is not a good. Greed is always bad. So you should not have a greed. not only for in this market, but in your personal life as well. We make mistakes. Why we become a the debtor? Why we take the loans? Tell me. 90% people take the loans not because their need. Understand? 90% people takes the loan not because of their needs, but because of their wants. They want something in the life. They want a car. They want a big home. They want someone bought the phone. They want that phone. They will take a loan. They will take this phone on EMI. They will buy a big home with the EMI. They will take a car with the taking of loans. They will try to show off. How many people are agreed with this statement? Reply me in the chat box. And that's the reason actually we become a debtor. That's the reason we become a debtor. He has a good amount of money. I don't have money. Let's go to stock markets. Okay, we'll take money from someone else, or we'll whatever money we have, we'll start investing. We'll take a credit card and we'll swap, and we make losses. Why we are doing this? We have a greed. This is the greed. Yes. If you are really wanted to make money in the stock markets, what are the first steps? Understand the stock market. So how you will understand? Learn the stock markets, invest on yourself, learn the stock market, and then start trading. That's not a greed. Then you are going through the process. Scary money never win in the markets. Because of you took this money from someone else, because of you already made a loss, because of you don't have money, each and every trades where you will put, you will stay in a fear mode. In the back of the mind, if something goes wrong, you will start fearing. What will do? Whether I'll make money or not today. Okay. Even you are not able to digest the profit when the market is going up, you kill the winner, assuming that it will fall down and you will lose money. Instead of losing money, let's cut it now. That's also fear. So how this happens? Why this happen? So this happen because of the lack of knowledge, because we don't have knowledge. And because of that, all the time we do trades impulsive mode. When you feel, let's buy. When you feel, let's sell it out. These are the emotion cycles. These are the emotion cycles which we already have in our mind. And we cannot trade along with these emotions, these four emotions which I have explained you. We will not able to make money if we have these four emotions in the markets. See, I'm talking about not in the market. Even if if you use those emotions in your personal life also, you will realize that these all are the emotions. So it should be in a control. Okay. And you should not act on these kind of emotions. Hope, fear, greed will not work in the markets. Here it is, only and only educations will work. How many people are really, understanding this? How many people are agreed with this, that the emotions will not work in the markets? How many people agreed with this? Reply me in the chat box. All the YouTube viewer, you also can reply in the chat box. All the YouTube viewer, you also can reply in the chat box, please. And I hope you have subscribed this channel. Those who has not subscribed the channel, please subscribe the channel. Okay. Thank you so much. Thank you so much. All right. So I need one commitment that you are not going to use any emotions in your trading. I want some commitment from your side. If you are really want to become a trader or a profitable traders, you will never use this emotion. Are you really committing me this? Yes or no? Yes or no? Good. If you commit yourself that you are not going to do this, once your subconscious mind accept this, believe me, you will not make a mistakes. You will not make a mistakes. You will always remember these sessions. Okay. So the professional trader flows is something like, identify the right opportunities. So maybe the accumulation phase, breakouts, you know, right time entry, right time, the exit. Professional traders always wait. They don't be a hurry. They always keep waiting, keep waiting. Okay. And as and when they got a perfect trade setups, then only they enter. So, how many people are really interested to become a professional trader? Reply me in the chat box. Are you really want to become a professional traders? Reply me in the chat box. Yes, yes, very good. So if you are really wanted to become a professional traders, you have to learn. You should learn, right? I may help you out for your learning journey. Are you really serious about the learning? If yes, I'm going to help you out. Entire, the 1 year, I'm going to help you out. How I will help you out? So we have the premium, premium course, which is 1 year period of times. Less than 90 days, you will become a master, you will become a trader if you trade based on the strategy, based on the discipline. 21 days, scientifically proven, it's a 21 days required, 21 days to required to create the new habits. And the 90 days requires the habits which you already created from 10 years to 20 years, 30 years, 40 years, 50 years. To remove that habit, it requires 90 days, my friend. So less than 90 days will make you a profitable trader and independent traders. By the way, independent traders, the Indian Independence Day is going to come, the day after. Okay. And I believe there are 90% people are Indian only, whether they are sitting in other countries, but they are Indian. Okay, so we are really proud of being Indians, and because of the 15 August is coming, we have something for you related to the course. Okay. By the way, I just wanted to tell you the today which we have learned about the trading psychology, and this trading psychology will improve only when you take the educations and live experience. So if you want to take a live experience and if you want to trade with me, I can help you out. Okay. How many people are interested to trade with me? Reply me in the chat box. How many people are really interested to trade with me? How many people are interested to trade with me? Reply me in the chat box. Great. Great. So definitely we are going to help you out. Okay. And tomorrow is the Friday. So today was the last day. If anybody is interested to take our premium course, they can get in touch with us for the huge offer, and I'm sharing you the details. 971-58241-9933 is the number. So if you are interested, you can WhatsApp and you will get all informations regarding the what price we are offering for the upcoming Independence Day. Okay, so here it is. Thank you so much for your time, and I hope you have learned today. Just wanted to take a feedback from your side, wherever you are, whichever group you are. Please put one message. Please put your feedback on the group right now. So I will see the who is putting the feedback. Wherever you are, you can put the today's feedback, whether you like these sessions, didn't like the sessions, what you liked in these sessions. So this gives us the this encourage me to do this kind of the sessions and spend time with you. So along with this, thank you so much, my friends, and very soon we will see you again. Thank you so much. If you have any questions, queries, I'll be here for next 5 minutes. You can ask me. Okay, thank you so much. Your valuable feedback. I'll definitely we will the work more and more for your side. Thank you.